You know what's funny about the really big moments in history? They rarely announce themselves with trumpets and excitement. Most people were looking at their phones, getting coffee, or sitting in traffic when a courtroom in Washington just changed the rules of presidential power. No drama, no live TV coverage, just judges and legal papers in a decision that could change how America does business with the world. And if you're wondering why you should care, let me explain it simply. This affects your parents' jobs, your family's money, the price of everything you buy, and how much power one person can have over the entire economy. So, let's explain exactly what happened, why it matters, and what comes next in plain English without the confusing legal talk. Here's the situation in one sentence. A federal court just told the President of the United States that he went too far when he put huge taxes on our biggest trading partners. The Court of International Trade looked at how the government used something called the International Emergency Economic Powers Act. Let's just call it IEPA. And basically said, hold on a second, that's not what this law was made for. Think of it like this. Imagine your boss gives you a company credit card for emergencies, flat tire, unexpected client dinner, things like that. Then one day you use it to buy a new car because you decided the company fleet needs upgrading. Your boss is going to say, that's not what I gave you that card for. That's basically what the court did here. IEPA has been around since 1977, almost 50 years. It's a law that gives the president special powers to act fast during real national emergencies. We're talking about freezing terrorist money, punishing dangerous countries, responding to immediate threats to our country's safety. The key word is emergencies, and not whenever it seems convenient, not when you want to change trade rules. Emergency is the important word. Throughout its history, IEPA has been used for focused, specific actions. Freezing money of terrorist groups, punishing North Korea or Iran, responding to cyber attacks, addressing specific immediate threats, but using it to put big taxes on Canada, Mexico, and China, countries that together represent a huge chunk of all American trade. The court looked at that and said, this isn't an emergency. This is economic policy, and there's a difference. We're not talking about small symbolic actions here. These were big taxes that hit three of America's largest trading partners. Canada, our friendly neighbor to the north, who we trade billions with every single day. Mexico, connected to us through complicated supply chains where parts cross the border multiple times before becoming finished products. China, love them or hate them. They're deeply connected in how American businesses work. These taxes were part of what the government called Liberation Day, a big plan to bring manufacturing back to America by making imported goods more expensive. The problem, the court said, you can't remake the entire American economy by declaring an emergency and skipping Congress. Here's what makes this ruling so important. It's not really about whether taxes are good or bad policy. The judges didn't say, we think these taxes are a terrible idea for the economy. That's not their job. Courts don't make policy decisions, they make legal decisions. What they said was, we don't see where Congress gave you permission to do something this big. This is about the Constitution, about how power is supposed to work in America. Congress has the constitutional authority to control trade with foreign countries. That's clearly written in the Constitution. Now, Congress can hand over some of that authority to the President for specific situations. They can say in certain emergencies you can act quickly without waiting for us to pass new laws. But, and this is important, that handover has to have limits. The court found that the way IEPA was being used created what they called an unbounded delegation of power. In other words, it gave the president basically unlimited authority to change trade policy however he wanted just by declaring an emergency. That breaks a basic rule. Power in America is supposed to be divided, checked, and balanced. No single person should be able to change the entire economy without meaningful oversight. Let me paint you a picture of what this means for real companies. Imagine you run a business that brings in parts from Mexico. 6 months ago, the government put a 25% tax on everything you bring in. Suddenly, your costs go way up. You have 3 options. 1. Pass the cost to customers who might stop buying. 2. Absorb the costs yourself, killing your profit. 3. Lay off workers or cancel investments to stay alive. You choose option 3. You let people go. You cancel the factory expansion. You tighten your belt and survive. Then a court says, actually, those taxes weren't legally valid in the first place. Now what? You might be entitled to refunds, potentially millions of dollars you paid in taxes. That money could flow back into your business. You could rehire those workers. You could restart that expansion. But there's a catch. The ruling isn't final. Appeals are coming. Nothing is certain yet. So you're stuck in limbo. Do you plan for the taxes staying? Do you plan for them going away? Do you completely change your supply chain or wait it out? That uncertainty, that's what businesses hate most. You can plan around bad news, you can adjust to higher costs, but when you don't know what the rules will be 6 months from now, that's when things get really hard. Here's where the story takes an important turn. The government immediately appealed the ruling, and within hours, the Federal Circuit, the next level up in the court system, granted what's called an administrative stay. In plain English, the taxes stay in place for now while the appeal continues. Think of it as hitting the pause button. The trade court said, these taxes are illegal. The appeals court said, hold on, don't change anything yet until we review this. So right now today, the taxes are still there. Companies are still paying them. Nothing has rolled back. But the legal foundation underneath those taxes is shaky. Everyone knows this could go either way. And that uncertainty is creating ripples through every boardroom and trading floor in the country. The court used a legal principle that's becoming increasingly important, the major questions doctrine. Here's the idea in simple terms. If a decision has enormous economic and political consequences, Congress should be the one making it, not unelected officials in the executive branch. It's like the difference between your manager approving a $500 expense versus a $5 million investment. Some decisions are too big to be made without going through proper channels. The court said these taxes have huge economic significance. They affect millions of jobs, billions in trade, the price of countless products, America's relationships with its closest allies, decisions that big require clear congressional authorization. You can't just find some unclear language in a 50-year-old law and stretch it to cover something this huge. If you're an investor trying to value companies, this ruling just added a whole new variable to your calculations. Let's say you own stock in a company that's heavily exposed to international trade. Yesterday, you were modeling their future cash flows based on the taxes staying in place. Today, you have to consider, what if the taxes disappear? What if they're replaced with something else? What if Congress passes new laws? What if this drags out for years? Every one of those scenarios produces different financial outcomes. And when you can't confidently predict which scenario will happen, you demand a higher return to make up for that uncertainty. Higher required returns mean lower valuations. Lower valuations mean stock prices adjust downward. We've already seen some of this in market reactions. Not a crash, nothing dramatic, but shifts in certain sectors. Companies most directly affected by trade policy are seeing their stocks move as investors recalibrate their assumptions. And this will continue as the legal process unfolds. This isn't the first time courts have pushed back against expansive executive power. Back during the New Deal, the Supreme Court struck down key parts of FDR's economic recovery programs, saying Congress had handed over too much power to the president without sufficient limits. FDR was furious. His whole strategy was built on those handed-over powers. When the court said no, it threw everything into chaos. Eventually, some programs got restructured with clearer congressional authorization. Others just ended. But an important principle emerged. Even in an emergency, even when swift action is needed, there are limits to how much power can be concentrated in one branch of government. This case echoes that same principle. The court is saying, yes, the president has significant authority, but no, that authority isn't unlimited and the boundaries matter. Here's something people aren't talking about enough. This ruling affects America's negotiating power with other countries. If you're Canada or Mexico or China and you're negotiating trade deals with the United States, you just learned something important. American tariff threats might not be as solid as they seem. If foreign governments think these taxes might not survive legal challenge, does that weaken the U.S. position at the bargaining table? Maybe they decide to wait it out. Maybe they think, let's see what the courts do before we make concessions. That's a real consequence of this legal uncertainty. It's not just about what happens inside America. It affects how the whole world sees American power and reliability. For decades, Congress has been happy to let presidents handle trade policy. The thinking was, trade moves fast. The president can act quickly. Congress would just get stuck in partisan fights and accomplish nothing. So, Congress handed over authority and mostly stayed out of the way. But this court ruling is basically saying if you want the president to have this power, you need to say so clearly. You can't just let unclear old laws be stretched beyond recognition. That means Congress might actually have to make laws. They might have to debate, hold hearings, take votes, and clearly authorize trade policy. Some people think that's great. Major decisions should go through that democratic process with all its public input and compromise. Others think it's a recipe for gridlock and dysfunction. Congress can't agree on anything these days. How are they going to pass comprehensive trade legislation? But that's the system we have, and this court ruling is saying, use the system, don't try to shortcut it. Let's zoom out for a moment and talk about why this matters beyond just trade and taxes. The Constitution divides power among three branches of government for a reason. The founders didn't trust any single person or group to have too much control. Over the past few decades, really speeding up since 9/11, there's been a gradual expansion of executive power during emergencies. Presidents of both parties have pushed the boundaries of what they can do without clear congressional authorization. Sometimes that's necessary. Real emergencies require quick action, but there's a risk emergency becomes the new normal. Powers granted for exceptional circumstances become routine tools of governance. And when that happens, the balance of power shifts in ways our constitutional system wasn't designed for. This court ruling pushes back against that trend. It says, no, you can't use emergency powers as a general-purpose policy tool. Emergencies have to be actual emergencies. Regardless of how you feel about these specific taxes, having courts willing to enforce limits on executive power is healthy for the system. The million-dollar question, where does this go from here? The appeals process will continue. This will likely go to a higher court, possibly eventually to the Supreme Court if the issues are significant enough. In the meantime, confusion reigns. Some taxes might stay in place during appeals. Others might be suspended. Companies will have to make decisions without knowing what the legal landscape will look like in 6 months or a year. Congress might act. If lawmakers want these taxes to be policy, they might need to pass laws clearly authorizing them. That would require the normal legislative process, debate, compromise, votes. The administration might pivot. They could rely on different legal authorities that weren't challenged in this ruling. They could try to craft emergency declarations that meet the court's standards. They could negotiate deals that don't rely on taxes, multiple paths forward, multiple possible outcomes. And until we get clarity, everyone operates in uncertainty. Important to understand this ruling is narrower than some headlines suggest. The court did not strike down all presidential trade authority, touch taxes imposed under other laws, say the president can never act in emergencies, make a judgment about whether taxes are good or bad policy. What they did say that this specific law, IEPA, doesn't authorize sweeping global taxes, require clearer congressional authorization for actions this huge, apply limits to one particular use of executive power. Other tax authorities remain untouched. The president still has significant power under different laws. This isn't the end of executive trade policy. It's a boundary on how far one specific law can be stretched. If you're trying to figure out what this means for your portfolio, here's how to think about it. Short term, more uncertainty, more ups and downs, harder to predict how trade policy will change. Companies exposed to international trade face more risk, which means their valuations might need to adjust. Long term, potentially more stability. A system where courts enforce meaningful limits, where power is checked and balanced, where no single actor can reshape everything unilaterally, that's a more predictable system over time. Uncertainty is uncomfortable now. But institutional strength, the commitment to boundaries, to process, to the rule of law, that's valuable for long-term investors. Warren Buffett has always said he invests in American businesses because America has strong institutions, courts that enforce limits, a government of laws, not just of powerful individuals. This ruling, even with all its short-term complications, reinforces that America's institutions still work, checks still function, power remains bounded by law, and that's worth something. Even if it's hard to measure. Here's the thing about boundaries. They're annoying when they get in your way, but they're essential for a functioning system. If you're the president trying to implement policy, court rulings like this are frustrating. They slow things down. They create complications. They force you to go through more processes and get more authorizations. But if you're a business trying to plan for the future, or an investor trying to build long-term wealth, or a citizen who wants to know the government can't just do whatever it wants, boundaries are good. They create predictability. They prevent sudden, huge changes that upend everything. They ensure that major decisions go through proper channels with proper debate. Yes, that makes government slower. Yes, that makes policy implementation messier. But it also makes the system more stable, more reliable, more trustworthy. And over the long run, that stability is the foundation everything else is built on. We live in an era of hot takes and breathless headlines. Every news story gets spun as either a complete disaster or a total triumph. Nuance gets lost, context disappears. But the truth here is actually pretty straightforward. Once you cut through the noise, a court said the president used a law in a way it wasn't designed for. 2. The administration appealed and the taxes stayed in place during the appeal. 3. The final outcome will determine what authority exists for future trade policy. 4. In the meantime, businesses and investors operate with more uncertainty. 5. The system is working through a disagreement about power and limits. Not a crisis, not a catastrophe, not the end of presidential authority or the collapse of trade policy. Just the government functioning the way it's supposed to, with different branches playing their roles, with disagreements being resolved through legal process rather than force or command. If you're still reading this far, you're probably wondering, okay, but what does this mean for me? Fair question. Here's what matters. First, if you're a business owner or executive, legal uncertainty around trade policy is now higher. You need to model multiple scenarios. Don't assume current taxes are permanent, but don't assume they're going away either. Plan for flexibility. Second, if you're an investor, companies with heavy international trade exposure face more risk. That risk needs to be priced in. But long-term, a system with meaningful checks on executive power is actually more stable for investing. Third, if you're an employee in manufacturing or trade-affected industries, your job security is tied to how this plays out. Taxes staying might protect some jobs. Taxes going away might hurt others. The uncertainty itself is probably the hardest part. Fourth, if you're a citizen who cares about how government works, this is a test of whether our constitutional system still functions, whether courts still enforce meaningful limits, whether power remains divided and checked. And so far, the system seems to be working. The appeals process could take months, possibly longer. Here's the likely path. Next few months, the Federal Circuit reviews the case. Both sides submit detailed legal arguments. Oral arguments happen. Judges deliberate. Possible outcomes. They affirm the trade court's decision. Taxes would come down. They reverse it. Taxes stay with stronger legal foundation. They send it back for more proceedings with different instructions. If it's a big enough deal, the Supreme Court might eventually take the case. That adds more months, possibly another year. In the meantime, the administrative stay keeps taxes in place. Businesses operate under current rules while waiting for clarity. Bottom line, don't expect quick resolution. These things take time, and until we get a final answer, everyone operates with incomplete information. Here's something that often gets overlooked in all the immediate political reaction. Strong institutions matter more than any single policy outcome. A country where courts can tell a president, no, that's a strong country. A system where power has real limits, that's a reliable system. A government where different branches check each other, that's a stable foundation for long-term prosperity. You can disagree about whether these specific taxes are good or bad. You can have different views on trade policy. Reasonable people differ on those questions. But regardless of your policy preferences, you should want a system where authority has to be justified, not just claimed. Major decisions require proper authorization. Courts enforce meaningful boundaries. No single person can reshape the entire economy unilaterally. That's not about politics. That's about institutional health. And institutional health is what makes a country a good place to do business, a safe place to invest, a reliable foundation for building wealth over decades. If there's one thing to take away from all this, it's this. Think long term. The short term is messy. Taxes are up in the air. Appeals are pending. Uncertainty is high. Markets are adjusting. But the long-term story is about whether America's institutions still work, whether checks and balances still function, whether the rule of law still means something. And based on this ruling, based on the court's willingness to enforce limits even on presidential power, based on the system grinding through this disagreement in an orderly legal process, the answer seems to be yes. The institutions are working, the checks are functioning, the boundaries are holding. That's not exciting. It doesn't make for dramatic headlines, but it's deeply important because at the end of the day, that institutional strength, that commitment to boundaries and process and limits on power, that's what separates stable, successful countries from chaotic ones. And that's the real story here. Beyond the taxes and the politics and the immediate market reactions, the system is working, and that's worth more than most people realize.